and welcome to Financial Fitness with Deb Maybury. Hi, Deb. How are you today?
Hi, Dave. I'm fabulous. I'm running really high energy right now. I just got back from cycling, so thanks for
Fantastic.
doing this call.
Cycling and then stocks. They sound like
Cycling
they
and
might go
stocks.
together. Stocks and then cycling. It can be both ways. You can start at today. It's 1 o'clock. You can look at the markets at 9:30, 1 o'clock, and 4 o'clock. That might be a nice transition throughout the day to analyze what you've been doing. So, what have you been doing for the last couple of weeks on your stocks or your portfolio?
Well, I've really been engaging in that process of watching. I had some stocks previously, and so I've been watching them, and they've gone down a little bit, and then up a little bit, and back down a little bit. So I've also purchased, another stock. Just after, I think it was when we talked, I was looking at it and I had put in again, terminology is not my thing, but I had
Right.
put in an order that if it hit $6 a share, that I would purchase 150 shares.
Super.
So it hit the six,
Super.
right? And then it dipped a little, and then it went back, went over $8 a share.
Mm-hmm.
So we can talk about that. But then the other thing I did is I put another order in if Air Canada went down to 13. It was 15,
Yes.
and there's been a lot going on, and I'm concerned in a sense that it's going to totally tank.
Right.
And yet, when you look at it over time, it has consistently, been up considerably higher than where it is.
So let's pick up, if it tanks, that's actually a really good thing because then you could buy it at maybe the price you want.
Yes.
So that's the reverse psychology that often goes in the markets. And this is you put a buy in the market and you get your $6. It goes up to, again, if you had thought about where did you want to sell a little piece or sell the whole thing, that's perhaps the difference between trading and investing. And it's a little bit of what we're going to talk about today. I understand you also took a look at the Millennial portfolio that my nephew Alex put together. And was there any observation or noticing that you had from that experience of watching it on Continual Shift, taking a look at a different perspective to investing? What did you learn from that?
Yes, it was great to hear from his perspective because I wasn't sure how much I wanted to in terms of dollars and cents to put into the stocks. And so from his perspective, he was actually looking at, I think it was $2,000. So he was at a lower level than I would be with, I would say, play money in a sense. Okay.
Yes.
Cautious, but still, it's not going to affect me dearly if something awful happened, right? So yes, you mentioned, I'm just looking up on the screen, he had mentioned Canadian Natural Resources. So I was looking at that one because, and then also Virgin Galactic, I think he was looking at that one too, where we had maybe talked about that one too. Right. And it's exciting for them right now too, because, what's happening with the flight. I was watching the flight that didn't, I didn't even know about it. So then, because we've been talking about it, and then I heard something about it, got excited, thought, well, let me check this out and look at the stock. So I've been watching those, and they're also like a lower stock. I don't feel comfortable buying, 10 shares of something that's $80. Because when I compare like a stock at $80, if it goes up $2, that's such a small percentage, really. And yet, if I purchase like some of the stocks that I had purchased about a year ago, that flexibility up $2, well, I have a lot more of those.
Well, that's a psychology we can go into also, because that's one of the things that in the States right now, they have fractional ownership. So you can go and buy 1/10 of a share or half of a share. It's not here in Canada yet. It will move here eventually. So it is something to be mindful of. Congratulations on, again, being curious, inviting all the different wonderful companies into your reticular activating system, being curious about different stocks for different purposes. Last week, last time we got together, we looked at a number of stocks. And what I did is I went onto Yahoo Finance and I put them on a little spreadsheet. And so if we would have put about $2,000 into 8 different stocks, this would have been your portfolio. It would have been Microsoft, 8 shares at about a 2,000 value. In the last couple of weeks, it's down total about 2%. Apple, 5 shares at about $300. It's up about 2%. AT&T we would have got because we wanted a dividend stock. It's got an over 7% dividend. It's up 3%. Bell Canada, if you want to do a similar thing in Canada, again, it's up marginal. The one that you just talked about, HMMJ, you mentioned it. And the interesting, the cannabis stocks have been up and down. Today, in fact, Canopy's down 16%. And so there's volatility. And as you can see, it's up down 6% today. But since you talked about it, it's up almost 20%. Then we talked Air Canada, which you mentioned, which today's session, I've done a deeper dive into Air Canada to show you some of the ratios that we might look to, and then also doing a comparison to the best of breed from America. And then Virgin Galactic, since we spoke, again, today it's up 2.8%. And then TD, the Canadian banks have also been very volatile since the last time we spoke. They've just recently announced their reserves. So many of the banking's numbers are worse this quarter, but that's because they've taken billions of dollars to put it against their COVID losses. So when you take a look at that little portfolio that, again, came from our chat last time, if we would have put the money in right at that time, which is not what I'm encouraging, this is called a mock portfolio. It's like paper trading, but it is something that I would be inviting our friends who are looking to have these different types of portfolios so they can start tracking the different stocks. And yet if we would have put the $16,900 in the last month, we would be up about 2.6%.
You know, it's interesting because just before you started to record, we were also talking with regards to the HMMJ.
Yes.
And when I purchased that, it had gone up over $2 a share.
Yes.
And I had purchased 150 of those. And then it's funny because I went back and I had printed out what you had created for me, which I really appreciate. And then you had said 300 stock, and I was, doing the math, right? You really have to kind of put your emotions to the side a little bit, or questioning of what you've done or not done, just to get this sort of this training, this awareness, this comfort level to, to be in line with this whole process over time. But I was thinking, oh, Dave said 300 and I bought 150 if I bought, double. And then if I had sold it, because I think it went up to maybe 8.2 or something like that. I can't remember exactly what
we can do is we can take a look. So there you go. This is the chart for the last month. And so you picked it up at 6. And so it went up as high as 835. And then now 70.50. Now you could be there beating yourself up saying, bad, 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 I should have sold it. No, it's not about selling at the high and not about selling at the low. In fact, developing a relationship, now you have a relationship with 150 shares. If it drops, you might actually buy more. If it goes up, you actually might sell a little bit, because that allows you to start to see the flow of the stock. And that's one of the things that trading is really good for. I wouldn't look necessarily at HMMJ as a long-term hold. However, if you do, because it is a fund, it can allow you to have a longer-term relationship and to be a participant in the market. And so you can see this is 5 years. It's been as high as $24, and pretty much it's been as low as $6. Actually, $4.39 is the 52-week low. So when you see it from this perspective, you get to see the range, and then you can decide to have a core position. And if it drops, if you still want to own some, because this is one that if it drops, you could actually buy some more, because today it's down so much, primarily because Canopy has been pounded, and it's likely that Canopy is a big player in this portfolio.
Yes, and that's what I have done. Not in Yahoo Finance. I'm actually going to I'm going to go on this. I've been doing it all within my TD account.
Yes, well,
It
that's
provides a
definitely
lot of the same.
definitely what our investors can do is they can have it in their TD account, they can have it in Yahoo Finance, they can have it in Wealth Simple. So this is our friend Canopy, and that's one of the reasons why your fund is down today. So it went all the way up to 21 bucks, and then today it's down 18%, over 20%. Today's range, 16.95 to 18.30. So very volatile, very active, very much you can trade if you want, and you can also have a core position. Does that make sense?
Yes, and that's what that it's in my mind now, oh, maybe I should just sell 50 shares just to have this kind of feel, but also, within TD, it's $10 in, $10 out each time,
Yes.
which isn't a lot. I mean, I can do that basic math,
Right.
but I was just sort of, in a sense, just getting used to the process.
Correct.
That's kind of like what my goal is right now.
Absolutely. And that's the part that I'm really happy to be sharing with you, is that when you've got the different emotions come, we're at that stage in our life that we can notice ourselves. And if we can laugh a little bit more, because for $33, we might be getting upset. Or we might find it humorous and saying, well, again, this is giving me the practice, the emotional practice of picking a stock, taking action, having a profit, taking some profit, a stock drop, instead of getting afraid or upset. No, it drops. I still like it. I'm going to buy some more. And in my analysis that I did primarily to talk to you today, that's perhaps some of the lessons that looking at Air Canada can be.
Yes, for sure. And I've been looking back in the history of the stocks as well, to get a sense of, their lowest figure, their highest figure, where I'm buying in. I mean, right now with Air Canada, there was a lot in the news yesterday. And so I was in this mode, well, is it going to be sold? Is it going to blow up? Or is it, what's going to happen? And there's so many questions, and I don't know enough in that sense to even guesstimate.
Well, that's why I'm happy that we're having this session and inviting people to also ask questions or add comments, or even if they want to go through a bit of like a process like that, I'd really be open to it too. So on YouTube, if you like it, hit a like and add some comments and questions, because this is what I was up at 5:30 in the morning to do this today. So I'm pretty excited just to share this, because it's something that it woke me up. I wanted to do it. So shall we start with our little analysis? And again, you can follow along, because any stock that you're interested in, you can follow a little bit of this guidance, and then you can start to create your own way of doing it. I think that's the part of investing or trading is exciting and hopefully fun, because if it's fun and exciting, then we'll actually put some time into it. Sort of like that 100-kilometer bike ride that you take, right?
Exactly. I have a lot more skill in that area than in the stocks.
Yes, and what's fascinating is that that you can get to a fairly high level of competency with a little bit of attention and interest and curiosity, and that's one of the things that I admire so much about you. So let's start off with, I wanted a premise, and the premise today was to look at Air Canada, and that's what I originally started. And then my mind went to tell you just about Air Canada is one thing, asking you about Air Canada, your emotion around Air Canada, so is part of making it more of an emotional experience. And then from an analysis perspective is comparing it to something, which is also very useful when you're doing financial decision making or modeling. And so I started out just doing Air Canada and showing and wanting to show you just some of the ratios to look at, some of the numbers to look at that are right in front of us. It's just, if you look at them and you don't know what to look at, you don't know what to look at. And so today's session is about some of the ratios. It's not totally comprehensive. And again, I'm not a stock advisor or anyone. It's simply for education and for fun and for sharing. And so let's start it off. So first of all, when you think of Air Canada, what sort of comes to mind for you?
Well, the first thing that comes to mind is that we're not able to utilize the service at this time, unfortunately, or certainly in a restricted type of manner in terms of their apparently taking out seats and using them, for cargo and whatnot. The company had a lot of, money reserved, and then obviously it's going to be depleted as time goes on. So it's all of those thoughts, like how long will it be? Well, what if it's 2 years? I know I wouldn't get on a plane anytime soon, given what's going on with COVID-19. So, the first questions were, how low can this go? And can this company maintain? And if it's sold off, bought by China or somewhere, what effect does that have on the stock that I could potentially have?
Oh, okay, those are fascinating questions. Again, each person's going to have their own personal view. When I think of Air Canada, I think of quality service. When I compare it to the Americans, it tends to be better in service. When I compare it to many of the Asian airlines, it's worse service, yet it's improved. Their airplanes have been nicer in the last 5 years. And financially, I do remember for a long time, they were $3 or $5 or $7. This past year, it's gone up. So when I put this together for us, it's fun because I got to practice some of the things that I'm interested in. This YouTube's interesting for me, Canva design. So let's start off our little presentation, and this is how it will go. So, okay, it's gonna be started here, and there we go. And let's push this, and this, and this. So are we going to invest, trade, or pass? A comparison between Air Canada and Southwest. And so why Southwest is best of breed in America. All right. So when I first started out, I wanted to show you a slide that comes from Yahoo Finance. And these are basic numbers that would come from the Yahoo Finance market capitalization. That's the number of shares times the price. Trailing price earnings. This is the price and the earnings last year, because they didn't make very much money because of some of the challenges they had. Forward PE is how much they're expecting to make. And then price to book. Now, these statistics all come from the summary page in Yahoo Finance. Now, when you see that, that might not make much sense. Does it make some sense?
Marginally.
Okay, and that's where
I wouldn't be able to make any decisions based on this.
Correct. Now, one of the things I like about it is when you see the price to book, that suggests is that its current price is worth less than its book value, which we're going to get into in a further slide. But this is to start off with value measures. Second, we go into the financial highlights. Profit margin, the operating margin, the return on assets, the revenue, the gross profit, and then a very important number when you're looking at the success of a business, it's the earnings before interest, tax, and depreciation, and that's $2 billion. So we've got profits of $6 billion on revenues of $8 billion. It has a return of about 2%, and it's got operating margins of 5.7. Now, alone, when you see that, you'd sort of glaze over, notice the number, and not necessarily know what to do with it, okay? And that's one of the things that happens when we look at numbers separately. So then as we move on, the next numbers I'm going to be sharing with you are the balance sheet. And so this is what you were saying earlier. The nice thing about Air Canada right now is they actually do have cash reserves. So they can survive right now if they can't fly at all. $6.1 billion. Their debt, though, is $10 billion. Yeah. And so it could have problems if it can't start making money. Current ratio, which is the current asset divided by the current liabilities, is 1.13. We like to see it greater than 1 because it does suggest that they have the ability to survive some difficult times. Now, this is the number that quite surprised me, is the book value per share right now is $16.33. because I know you are getting interested in it, the stock around 16, around 13. So imagine if you buy it at 13, you're getting it less than book value. So that's a pretty good value for you to be picking that that's where you're interested in it. Screen that where those numbers come from. And that is, and it is the financial statistics. So if we go on to Yahoo Finance, or if you're using TD or someone else is using Wealth Simple, all of these statistics are available. And so I went through this statistics section. So the first one I often will look at is the summary section, because the summary will look at the current price. Often I'll look at the high and the low because it's such an important number to see where the price is relative. I'll look at the market cap, and then I'll look at the chart. If you're trading, you're going to be looking at the 5-day chart. You're going to look at the 1-day chart. So if we were looking at making a first investment in Air Canada, it's looking like it might be an interesting time to put some money at risk right now because it's at a low level. Now, it's not as quite as low as 13, which again is a nice target for you if that's what you want to do. Yet these are some of the ratios in the summary. It gives a little chart, and that's what I like to look at to get a gauge of where it is in the marketplace. And then to dig a little deeper, which I did in that analysis for you, I looked at the market cap, looked at the PE, the price earnings. And again, this will change for different industries, yet it also says forward price earnings, which is, it's suggesting it's going to have a lot more earnings next year. And then I would be looking at the profit margins here. I may look at the income statement to get an idea of how much profit. The balance sheet is something I'll definitely take a look at also to make sure. This was the interesting number that came up for me today in doing the review for you, was 16.33 was the book value. And then I would go and take a look at the stock price. And so this is just a nice statistics page that gives a lot of information. It's then digesting it, comparing it, taking it apart and getting some understanding of it. If you want even more detail, which is what I would encourage if somebody's really looking to improve their financial analytical skills, is then looking at the income statement, the balance sheet, and the cash flow statement. And so this is just further deep diving. Yet for many people, this is not necessarily required to do some investing and to do some trading to really understand each of these numbers. Yet what's nice, I think, in having a conversation is asking a question, joining a group, developing some comfort around the numbers instead of being totally at loss with the numbers or afraid of the numbers. Another nice number that comes out of this summary is the 1-year target is $31. So pick it up today at 15, perhaps next year it might be 31. Now, I'm not a big fan of just putting it in a closet and forget about it either, because part of the reason why I like investing is to develop that relationship with the business and then to understand some of the influences that come into play that moves the stock up. Look at these numbers. This is where you were looking at 52-week high and low for Air Canada, $9 to $52. For LUV, Southwestern, it's 58 to 24. The market cap, 4.2 for Air Canada, 19 billion for Southwest. Operating revenues, 18 billion versus 21 billion. Operating margin, 5.7 versus 10.8. So again, Southwestern's efficiency is higher than Air Canada. Current ratio, 1.13 for Air Canada, 0.69 for Southwestern. Air Canada's got a more conservative current ratio. Book value, 16 for Air Canada, 17 for Southwestern. Operating cash flows, pretty close, 2.5 billion. We take the next slide. Again, this is when I'm making a decision whether we should be trading this or investing in this. If we look at the 52-week highs, pretty similar. The lows, Air Canada is much lower. The 50-day moving average and the 200-day moving average, it tracks the stock price. And so the 50-day moving average for Air Canada was $17. The 200-day is 35, and today it's trading at 16. So does that sound like it's a pretty good deal?
Yes,
Yes.
actually.
Yes. And so the 50-day moving average for Southwestern is 29, the 200 is 54, and it's trading at 31. Now it also has a dividend. And so when I see this, I'm thinking as a stock to invest, I would likely consider Southwestern. A stock to trade, I would consider Air Canada. And so in my analysis right now, that's how I would be looking at if I wanted to buy an airline, which I'm hedging it a little bit. I'm not fully convinced. Yet that's why I'm excited to have a conversation with you today, is to get a little bit more of why would you want to invest in Air Canada? And would you be interested if you could pick it up 13? Would you be happy to sell a little bit at 17? You realize that's over a 30% return. Now, do you think that it could go down? Do you think it could go bankrupt? Well, that's the nice thing about Air Canada right now, and it's what a lot of the risk-averse investors are looking at, is it's not very likely Air Canada will go bankrupt. The government will likely step in. Yet, could Air Canada lose half its value? Well, as we've seen, it already has gone as low as $9. So we could go down another 40 or 50%. Does that make sense?
It makes complete sense. Down. I mean, they're really volatile, absolutely, right now. And then also going in, you know, within with what I'm watching, and then, you know, what companies make up that particular stock, and watching each of those and seeing, you know, what seems to be stable and what's red. So it's a really interesting process, and like I don't think you can ever put aside your emotions, or, oh, look at that, you know, like we're just oh, it's a puppy, like we're programmed for that excitement.
Dopamine. It's the dopamine drip. And this came in the conversation with Alex, is that Alex likes to gamble, even if it's just a little bit of money. And this is something that can be a bit of a dopamine drip, and it can be checking it throughout the day. And again, I'm introducing people to the idea of make it an education, make it edutainment, make it, again, for you and I, it's this opportunity to invest and learn and to grow. And that's one of the things I'm excited about.
Yeah. And for me, in all honesty, it's, you know, since I was 10 years old, I always made money. I always had money, you know, different amounts, different times, but I never really watched diligently. So I really want to create this habit and this pattern without being immersed in all the emotions. And so what I've done is what you suggested again. In the morning, generally, I'll look at it. And then sometimes in the afternoon, I'll look, and then I'll look at the end of the day to become familiar day in and day out what's going on, and to create a different attitude around observing the money. And that's become really important. And within that, but then there's also now the other stocks that I've purchased, they all have dividends, and they're all smaller amounts of money. So like I bought in, you know, more at $4, $6. I'd originally bought in 5 and 7, and it's gone down, but the average is, you know, so I'm still in this sort of lost position. But when I did all the charting and all the research, I thought, well, it would have to be really, really, really bad for it to just, you know, completely erode, right?
Right.
So it's been a practice of just watching. But the one thing that I did want to ask you, so then, like with the HMM stock, HMMJ stock. So, like I said, I bought it at 6, and then it went up. What did we say? 8.3 or something like that.
Yes.
And then now it's around 7.5. And I was thinking, well, should I have, you know, sold a little, or should I have actually bought more? Like, you know what I mean? Where do you sort of evaluate?
that's, again, each situation, again, for some people who have never really taken profit, I would encourage them to take a little profit because it's a nice feeling to take a little profit. I must admit, I've done both in the last week. Is that I had a stock, had a little profit, I sold it, and then I saw it go up $2 more, and there was the emotion saying, "Oh, I should have waited." And it's funny because I'm even bringing in my mother and talking to her a little bit about it, and I'm just excited to share. Another one, it went up, and I decided to buy more when it moved up. So I actually doubled my position because I thought it looked really good, and then when I bought more, it came down. And so there was never the absolute right. You can never absolutely buy at the bottom, or actually rarely you'll buy it absolutely at the bottom and rarely you'll sell it absolutely at the top. Yet the idea of developing the relationship and starting to see the movements of the market, taking some profits, have that as an experience, feel good about it. When a market goes against you, sometimes you'll sell it because you just don't like the fundamentals anymore. And so that takes, one of the key words in trading is discipline. And so for you, when you say, I want to buy it at 6, you might say to yourself, or write it down on your paper, and I'm planning to sell 25% at 7.5, and I'm going to sell 20% at 8. And if it goes down, I'm going to buy more at 4. And so you create the trade around it, or at least the target around it. And that's good discipline. That's what traders do. Investors ought to have those type of targets also, because this is a market. It is emotional. And so if you've written it down, it gives you a little bit more guidance to know where you want to go.
Yeah, that's a great idea. Just one other question that I had that I wanted to ask you
Sure.
while we were recording. So it's sort of a versus question. So buying, say, putting in $1,000, I'll just use an easy number, $1,000 buying Air Canada stocks versus $1,000 of, and again, there's no dividend there. $1,000 buying a $6 stock right now with a dividend.
Well, again, we're talking
analysis for me.
We're talking percentages. So again, getting a 2% dividend on a $6 stock, it's going to have a certain amount that's going to come back to you. So I like dividend stocks for a certain reason. Yet again, one of the reasons why we buy a stock that doesn't have a dividend is because they tend to have higher growth. And so the reason why we would put money into a Shopify, it's because it's got 25-35% growth. It's not going to pay a dividend because it can actually use the money that would pay out to dividends. It can use it more effectively growing the business.
Okay.
And so we have different parameters on different stocks that we would buy. And so when we put together your portfolio, we wanted to have one of those stocks that was like a high flyer, and it could be Virgin Galactic. We could have the Cannabis as a high flyer because it could double tomorrow. Yet we're going to have maybe something like Royal Bank, which might go up 10% or down 10%. And if you decide to sell some when it's up 8% and buy some more when it's down 8%, you'll actually have a relationship where you can have a long-term holding and also play the ups and downs. So it keeps you a little bit more engaged than just, again, locking it up and taking a look at it next year.
Right. Yeah, exactly. Because there's some of both for me.
And a number of the ones that we've talked about, like the AT&T or the Bell Canada, they have a 6% dividend right now, 5 to 7% dividend right now, which if you think about how much you're getting for your returns in your bank accounts at probably 1% or 0.5%, some of these investments right now are offering very attractive dividend rates. And so that's one of the things that I'm encouraging people. And then there's some that are offering like very high rates that is, it's riskier. Like I bought a couple recently that got 10, 12, 15% dividends. The risk is that they could be reduced. They could be wiped out. I had one, Royal Dutch Shell. First time since World War II, they reduced their dividend. I also recently bought Exxon because I like their 7.8% dividend. And so this is where I think this type of conversation is wonderful and rich, and hopefully we can continue to ask the questions that some people think are maybe foolish or they should know. No, if you've never done it before, be willing to ask the question. And if I give you an answer, you can re-ask the question in a different way so that it makes you feel more resourceful in your relationship with the markets.
Mm-hmm. And like I said before, like I really appreciate the education, because even when I'm looking, you know, I look within a different platform, and then it'll say buy this stock, or it'll say sell this stock, and yet, you know, you said, well, it's probably a good buy at this time, potentially. And then a friend of mine that originally got me in, you know, to purchasing some stock, and has done, you know, really well over time. I said, well, it's saying sell, and you just told me to put it into purchase to buy at 4. And she's like, don't even look at that, because look at the chart and look where it's been, do the comparison. And, you know, even if the market crashes, like, it would have to be so bad for that to turn into nothing, and just look at it over time, and then look at what that stock is holding. These are all reputable businesses that it's holding.
Right.
So the probability is low, and if you're not comfortable, don't buy it.
Yes. And so this is the beautiful thing, is that it is a relationship with the different holdings, whether you have ETFs, exchange traded funds, or you have mutual funds, or you have insurance products. These are all different ways for you to have experience and exposure to different financial products. And the one that I've really enjoyed sharing, teaching, and also being involved with are companies, because I think it makes my life a little bit more vibrant when I'm a little shareholder in this company or this company. And when an announcement happens, it's nice to be connected to a lot of cool different businesses too.
Mm-hmm. Well, I'm certainly enjoying it. I look forward to sort of following it over time, and you know, hopefully this will serve other people in listening to this as well. And I think we're both all about that. And it's
Absolutely.
been something, you know, I've had a relationship with money, and overall very comfortable relationship with money, but not actively engaged in watching the process. So I'm actually learning a lot, and having fun, and not spending tons of time on it.
Right.
But taking quality time, and this is quality time. So hopefully this serves other people as well.
Absolutely. And thank you so much. You have a great, wonderful day ahead, and we'll talk to you soon.
Okay, Dave.
Thank
Thanks
you.
so much.
Bye.